Hello, today's Friday. It is the 27th of April, 2012, and this video will go over a few different news headlines, and this is what you'll see on Yahoo Finance on the bottom right-hand side. They can give you the rates for different types of loans. This is credit cards. They'll give you mortgages and a bunch of other ones, but you'll have an easy time getting different rates. They'll state that low interest credit cards, 10.4%. They'll even give students credit cards. We'll talk at the very end about student debt. But it's very hard for people to find out the theory and fundamentals of interest and credit in how that it is 100% guaranteed to cause debt. And the reasons for such is because only central bankers can mine, I love that word mine, fiat currency. Well, I like the word mine because that's how you pretty much get money, because you mine gold, you mine silver, and mine's just another word to actually go out and get it. If it's oil, you go and get oil. If it's fiat currency, you go and you get the fiat currency. But because they charge interest, and if you happen to pay it off, well, where did that balance come from? You'll have a hard time, people or sites, talking about that. So let's go over a few articles. The next three or four or so will be about the Federal Reserve and this article from CNBC. The Fed Reserve, citing concerns about the pace of recovery, held its key interest rate near zero and indicated the economy would have to improve substantially for any changes in policy to take place. Generally speaking, you shouldn't have concerns about the pace of the recovery because, quite frankly, in order to have a recovery, that means you have to finish collapsing and start working towards improvements. Quite frankly, there is absolutely no signs of this being the case, in my opinion, and it is a statistical opinion. The Fed labeled economic growth as moderate and indicated that housing remains at a depressed level. Well, that depends on who you are. Sometimes it's depressed for some people, and it's the euphoria for other people, depending on what side of the fence you are on. A 9-to-1 vote accompanied the statement, which renewed the pledge to keep rates low through 2014. The discount rate remains unchanged at 0.75%. Well, that's what they said in 2010, that they're going to keep it low to 2012. Now that's the case of 2014. If this isn't a yellow/red flag, I don't know what is. The Fed has expanded its balance sheet to nearly $3 trillion through quantitative easing, while QE has coincided with a growth in stock market returns. It has also stoked fears of inflation and criticism that the Fed does not have a solid exit strategy to unwind all the debt it has accumulated. There's a lot to go over here. Okay, so the coinciding of stock markets going higher through nearly $3 trillion through QE, and that's what they state. What the real numbers are, well, there's no way of actually knowing, unfortunately, but quite frankly, you wonder why. My guess, and it's only a guess, is that a lot of this quantitative easing, as they like to call it, has been used to prop up the stock market. But again, that's just my opinion. And as far as stoking fears of inflation and criticism, well, bottom line is, if you're scared of it, yeah, but quite frankly, it's a guarantee that it's going to happen. So if you know that's the case, at least you're working with something that's easy. And as far as solid exit strategy, you can worry about other people's exit strategies, but unless you got one yourself, then what good is it? Do you have a solid exit strategy within a fiat currency system? And then, of course, they have it saying like an exit strategy to unwind the debt. Well, if the education was set for people to be aware that debt was 100% guaranteed, then that wouldn't even be talked about, because you accept it and then you're like, okay, well, the debt's going to keep on going higher, but I enjoy the fact that we have it. Well, people don't say that, but I think they should. Or they should say, oh, geez, we could probably do better than this, but in order to do it, we got to really get rid of this fiat currency system. And, well, That's not going on right now either. Inflation, at least at the core, excluding food and energy costs, remains within the Fed's target of 2%. Quite frankly, even 2% a year is high, but throwing that aside, excluding food and energy costs. Again, yellow/red flag. And if you want to know what inflation should really be set at, or a good way of getting accurate results, take a look at point A and point B. Those are years, and you can decide what they are yourself, and calculate how much all of these cost. These are different items. Energy is not on here. It can be a separate topic if you wish, but whatever energy is allocated towards is where you can put it. But food, clothing, healthcare, education, shelter, transportation, communication, self-explanatory. Charity is giving away resources of some sort to somebody else. That can be giving food to food banks. You have a niece, a nephew, a grandparent or something, and you give them a little bit of extra finances. There you go. You pay income taxes and sales taxes. Well, that's involuntary, but you're still giving that away. And then below is throwing it on stuff that's not in the need category. And balance of goods is your assets to pay for it. Usually your money, your fiat cash, your gold, your silver, and any other type of investment. If over, say, one period, and another way of doing it is the same kind of person within different times. But if, say, all of these would cost, say, 100 units in a year, say in 2001, and the balance of goods was, say, 120, that means you would be making more than you paid for. But say today your balance of goods is 130, yet the costs are 160, well, then that's not so good. But it's just another way of getting real inflation, or better inflation, because what we do today just doesn't make any sense. April 23rd from Bloomberg. U.S. stocks joined a global sell-off as political uncertainty in France and the Netherlands intensified concerns about Europe's sovereign debt crises. Well, I guess the good news is today it's the 27th and stock markets are right back at its highs again, but uncertainty? Why would you say uncertainty when, well, that's 100% guaranteed. Not 98%, not 73% or 48%, but 100%. So there shouldn't be any uncertainty. And if it's based on the debt crises making stocks go lower, well, then what's that going to tell you? Next article. Final article, too. If you have a college student in the family or an interest in presidential politics, by now you've probably heard that the interest rates on Stafford student loans are set to double on July 1st. Unless Congress takes action. President Barack Obama has been touring colleges' campuses this week, asking that rates be held to 3.4%. It's interesting how they say, by now you've probably heard. You're not going to get too many articles that say, by now you've probably heard that the measures in which currency is created in a debt-based system, that there's no way of debt ever being repaid back. You're not going to get that in an article, but you'll get this. Now again, final sentence states that President Barack Obama wants debt to continue. He doesn't talk about anything to stop the debt from happening. No, he says he wants the rates to be held to 3.4%. They could be 34%, they could be 3.4%, or they could be 0.003.4%. It's still not productive within this type of system when you have a monopolization of fiat currency that only central banks are allowed to mine. Thank you for tuning in, and have yourself a great weekend. Bye-bye.